Happy Sunday, apprentices. So have you ever been at a red light, turning right, and the cars coming are just spaced out enough where your brain's like, go, no, don't go. Go, no, don't go. Well, in trading, that's when you're sticking on your entry, and we're going to talk about that on today's show. Trading Forex or any other financial instrument carries substantial risk. The topics discussed on this show are the views of the host and the producers only. You should consult with your financial planner before investing in Forex or any other financial instrument. Don't be a dumbass.
Welcome to Day Trading Plumber, episode 38. I'm Matt Simpson, and I screwed up again.
How'd you screw up?
Well, we finally launched, after being told by several people, a community channel in Telegram, which is the Day Trading Plumber Forex community. And I got it all ready, did all the artwork for it, did all of that stuff, invited everybody, and it's read only.
Yeah, I mean, I think Telegram defaults there. But it was a good lesson. You had to, luckily there was only like 5 people in it when you had to go, sorry guys, go to this link now.
Yeah, but I still had to tell 320 people that I screwed up.
Yeah, well, get used to it, because wait till you trade for 300 people. Oh, here's your stop loss. Oh, wait, no, I moved it. Oh, wait, And then they're following your signals. They're like, dude, I got 9 signals in 10 minutes on the same pair.
Well, what do we have here?
Yes, I got a splurge a little bit. I got the 1792 small batch.
Kentucky bourbon, bud.
Yeah, it's Kentucky bourbon.
Whiskey with an E. Yeah.
Whiskey with an E. You know, but has a cork. See?
Here?
Has a cork. We're going to go no ice in honor of Matt Simpson because he has a splint on his finger today. We'll get into that. What did happen there?
Which finger is it on?
It's your person cut me off finger.
Yeah, that's right. It's an embarrassing injury. I wish I had a cool story about how I was hanging drywall, or how I was in an awkward position welding and I torched my finger. No, I got this from washing my hands a lot.
Really?
Yeah, the soap wore out the skin on my knuckle, on my middle finger, on my 70 plus words per minute hand.
So why the splint? Why not just
because the knuckle is split, and I have a giant cave in my knuckle, and so I have to keep it straight.
Dude, you got some dry hands, bro.
Again,
Cornhuskers lotion.
If I were out there slinging pipe, it wouldn't even be a story. But I sit in a chair.
Yeah, I thought maybe
and I type all day,
hanging some curtains, and the hammer got away.
No cool story. I didn't catch it on the bottom of a boat pulling in a giant fish. Nothing.
Well, hey, at least you're doing your part, just keeping people safe, washing your hands. Which, by the way, I think's a lot more useful than wearing masks and rubber gloves while you're driving down the road.
In your car by yourself?
Right. No shit. I saw a guy wearing a mask, rubber gloves.
This is a grown man,
sitting in the parking lot of 7-Eleven, eating those taquitos with his gloves on. He'd pull his mask down, take a bite, put his mask back
You're
on.
making that up.
No, I'm serious.
You are full of shit.
No, I almost filmed it. And I was just like, what have we become? You touch a door with those gloves, they're useless. Enough about that. I'm just glad things are starting to open up. Let's talk about entries. So we just had a good long hour with the live Ask Me Anything with our Journeyman group. Thanks, Matt, for putting that on. About entries. Earlier, Matt was talking about the day trading plumber Journeyman channel group thingy that we could all talk to each other.
The day trading plumber Forex community.
Oh, the community, not a read only. So today, one of the hot subjects was entries. I get asked a lot, how do you know your entry? So I wanted to talk a little bit about tonight. Entries is a focal point for a lot of trading content out there. It is the most sought after, everyone's after the holy grail of entry because, and a lot of these strategies people are putting out or teaching online or in these books, they talk about the entry. There's rules. It's a rule-based system. Just to throw one out there, the Bollinger Band strategy where price, the candle closed above or below the top line, that's your entry. Well, like in today's AMA, you can take that same strategy, sprinkle a little bit more of a different strategy, price action, right? And you get different results. Any strategy. It's tough because entries is one of the hardest. It's where it makes or breaks a trader because, in your stages of learning how to trade, first it's sponge stage, soaking up everything. You're reading every book. Some things are working. They're not. You're chalking up everything that's not working just because you're new. It's pretty much like you get into any trade, you get into any new thing that you're considering to be your career. In the early stages, it's, you don't know how to solder pipe yet. You don't know how to put a garbage disposal on. So everything's new. And then when you start to get a little bit more familiar, then we start going, I think I have this strategy down, but I'm just getting the entry wrong. And you could be correct. This is where it kind of contradicts my style of trading. Because don't get me wrong, guys, I try to be precise, sniper-like with my entries. But I've learned long ago that if I'm wrong, I'm okay. It's going to be okay. Is it Tim Hathcock, the sniper in Vietnam that had the most confirmed kills before the American sniper?
Gunny Hathcock?
Gunny. Well, he's a Marine, yeah. What was his first name? Tim? But let's
hold on. It was Carlos Hathcock.
Carlos? There you go.
Gunnery Sergeant is E7.
Sniper. World's best sniper until, the Fallujah days.
Kyle
Clark.
Chris Kyle.
9. I'm just kidding, dude. Kyle Clark on 9 News.
We don't joke about these things.
Okay. Yeah, Chris Kyle, the American sniper. If you haven't seen the movie, it's a great movie. However, so we all want to be those guys with our entries. And what really messes with your head when you're trying to be that precise with your entries and you're going down to the 1 minute and you're looking for that pin bar or the morning star, evening star pattern on your...
What's a pin bar?
So a pin bar would be a candle, right? If you're a candlestick trader, which most are, there's a large movement moving to line charts, back to line charts again. But if you're using the Japanese candlestick, the body of the candle is much smaller than the lengths of the wick or shadow above and below. So it looks kind of like a star twinkling. And, if the body's on the top side of the candle, it's called a hammer. But really what you're looking for is an indecision. If you remember how I always say, think about what the traders, the bulls and bears, are fighting. And it's become a level where there's no decision. So the candle's not very big. The wicks might be very long, the shadows, or whatever you call them. Some people will write into the show, which we'd love people to write into the show. It's called a shadow, not a wick.
DTP show at allenfx.com.
Nice plug. But yeah, if you're looking for that, price action on a 1 minute, it's going to come quick. It's going to come fast. Like what I was explaining tonight in the AMA, you use the higher time frames to get the direction. And what's really tough when you first start out trading and then you zero in on these smaller, because we want to be precision. So you go down to that 1 minute and the price action will almost basically right when it just feels like, oh, I'm an idiot. Why was I thinking short? Everything on this 1 minute is bullish. That's what I look for, right? Because I take a little bit more risks depending on how my portfolio looks. I'm a backside entry. When I say a backside entry trader, I don't mean like someone bending over the couch, but if you guys could have saw Matt's face, he'd even budge on that joke. If someone's a trend trader, they're trying to enter long, let's say it's an upward trend, and you draw a trend line, they're trying to enter long on the pullback up. Okay? Let's say that price gets into a consolidation at the top of that trend. Now it's in a sideways channel. I will look for that sell trade at the top of that, the very top of that channel, where most trend traders would be like, oh, the structure's still up. So you want to look for those buy trades at the bottom of the channel. I look for that reversal in a lot of my trades. Back to the pivot, hit S2, hit R2. It's going back to the pivot, which it's going to be breaking a smaller time frame trend. If it was trending down to S2, now it's going to go, you're counter trend trading back to the pivot. So I look for that backside push right when you think it's going to break through a level. If you're a religious stop loss trader, it's really the best place to put the trade in because you could go with a really tight stop loss at that point. And as far as entry goes, I'll give a secret that I'm putting in my Journeyman class tonight. The secret I look for on that 1 minute is I already know I want to go the opposite direction. Let's say price is going in a downward trend. Oh, it just hit S2. Now, I don't enter the second it hits S2. Now I'm looking for that price action confirmation, a double bottom, maybe a 15-minute pin bar on the S2. I want to see signs it's going to slow down because, another great strategy I trade is when price blows through S2 or R2, I trade back to R2 or S2. It's hard to explain. This could be the time it's going to blow through it, and then you just took the trade. So you're looking for that smaller time frame confirmation, the entry. If I'm trying to be super precise, I'm going to go down to a 5 minute, a 1 minute chart, even though I'm making an hourly or 4 hour assessment of price. But what I'm looking for is that last ditch effort. I call it price is squirting. It's basically shooting hard and fast on a 1 minute chart, completely opposite of what you thought when you were looking at that 4 hour chart. That to me is almost as good as confirmation. It's almost like it's the last ditch effort of, oh my God, I'm just going to sprint my way and make everyone think it's a breakout. Because remember, we're targeting levels that we know price is going to do something, right? Support and resistance, an R2 or S2 level, a pivot point, a Fibonacci retracement level. These are very common. There's no secret about it. These are very common levels. And if you've been in trading long enough, we all plot stuff the same. We all know where these are because we're all using the same settings on indicators. So we know where these levels are. So if you're going to use those smaller time frames as an entry to try to be the sniper, the Chris Kyle trader, because there's glory in it. Oh, I never had to go through drawdown because my entries are perfect. I look for, I'd be lying to say, I don't really care about being super tight on my entry. No, I try. But I also know if I'm wrong by 20 or 30 pips on a 190 pip projection move, I still call that pretty damn close, pretty damn good. But I look for that move on that 1 minute or 5 minute that just makes you think, oh my God, I'm wrong. It's going to be a breakout. And then you want to switch your, then when you're a newbie trader, you just go, well, if I think I'm wrong, I'm just going to switch my position. And then you just get hammered, right? You made a quick emotional decision, or it works out for you. And then you think that that's the way to trade every time. But guys, I mean, entries, yes, practice. Yes, try to be precise. But like I always say, if you're wrong, don't beat yourself up and don't let it force you into thinking you got to close that trade because your entry wasn't perfect. Because your entry wasn't perfect doesn't mean the trade's over or your analysis of that trade was wrong. You almost want to look at it as, okay, I'm using a swing trade strategy. I've made my analysis on higher time frames. I want to wait till price gets to this zone. I'm going to be long biased when it gets to this zone based on it's going to be a support. It's a strong support. You're already being long biased. So when it gets there, you have to be very careful you don't see something that's really not there. And we want to be precise with our entries. So when price gets in that zone or at that level, you start to zero in. And me personally, I wait until price basically just proved me wrong because I'm trying to hit that backside. That little squirt, what it looks like on a chart is a wick or a shadow. Quick move, just enough to make you think, oh, it's going to blow through. That's where I plant the seed. And at that point, your emotions are telling you, dude, you're wrong. Why'd you go short? Why'd you go long there when it's obvious? Because, you know, when you look at larger time frames, a lot more than smaller time frames, it plays tricks on your mind. Because when price moves that fast, opposite the way you're thinking, you're like, I'm an idiot trying to catch a falling knife. But no, that's like the last ditch effort. People closing their trades that were short, they're all getting out, and the broker's trying to find where's the liquidity at? Where's the price? And that's why looking at smaller time frames when you first start out trading, don't do it until you're ready, because it will mess you up for a while because it gets kind of euphoric. Another point I want to make with entries is I use almost the exact same analysis or rules for entries for my exits. Like I don't have a different exit. I do the same analysis. What Fibonacci level did it pivot on? What Fibonacci level did it reach to kind of try to predict a double bottom or, you know, prices stalling out? So when I'm in a profitable trade, I already kind of set where I think price is going to go. And this is when you start to get into that managing the open trade, which most traders will tell you there is no managing the trade. You had a 2-to-1 risk ratio. And so you think it's going to the pivot. Leave your trade on until it gets to the pivot. Well, I'll use price action and the same entry that got me in the trade, not necessarily that specific, but I'll let price action tell me, okay, now I better get out. Now the probabilities of it reversing on me are greater. So I'm going to close it for profit, maybe wait for a pullback, and maybe re-enter this long trade that I think in a long term is better. Or I might move on. I took a 1% profit off this trade. I'm up for the week. No need to babysit this and get all crazy. Oh my God, you could have left it on 3 more days and it would have got there. No, I moved on and made 6 other trades. It's just a very dangerous it's very dangerous to put your mindset to be so perfect on entries, to be so perfect on exits, and to be so precise. And I mean, I probably sound like a broken record, but until I gave myself permission to not be so precise on those things, my trading got way better. I quit putting so much negative affirmations on myself when it didn't work out perfect. Oh, it double bottomed. It has to go up. And there it is. I've been waiting all day for that. There it is. Pin bar, double bottom. I'm going long. What's dangerous is when you put that much emphasis, that much time, that much, patience on a trade like that, and then it works out, you're probably going to put too big of a position size. Because now you're like, it checked my 17 filters of box. It's precise. It's going to be the best trade of the year. Money management goes out the door, and it's the time it triple bottoms and breaks through, and then you want to be right so much you hold on to that puppy, and it takes half your account.
What the hell is with all these moths?
The year of the moth?
The year of the moth. What the hell?
Dude, they come, what is it, every 4 or 5 years? Well, let me tell you a story.
They're spite moths this year.
So let me tell you a story. My first year when I took over as director of engineering at Luxury Brand Hotel was the worst year of the moth. We have a giant needle on the top of the building. It's colored. If you've watched a Broncos game on Monday Night Football, they always show it. And if it's not orange, the owner used to call me, the needle's not orange. And I'd be like, it is orange. That's file footage they're using for Monday Night Football. And they'd be like, I go, look out your window, because he lives there. Oh, it's orange. But it was just funny. So it has all these big lights up there. And there's a penthouse, like the service elevator would open up there. And there's always massive amount of shit stored up there that shouldn't be up there. One of the biggest problems with hotels is not enough back of house space, and everyone likes to buy shit, but no one wants to throw shit away. And then when you're the engineering director, everyone's problems become your problem. And next thing you know, the fire marshal's like, you got 19 tables in front of the electrical panel. Remove them today. We won't go down that rabbit hole. But this penthouse had like the attic stock of carpet and all of this shit up there, right? Could barely get a cart through there. Well, I'm new. I'm the new sheriff in town, and, I'm making my way through the building. Well, spring rolls around, and it was like overnight, because I was probably up there maybe 4 days before. Nothing. Nothing out of the ordinary. Well, I get this call. Oh, my God, there's fucking millions of moths on the penthouse. And I'm like, what? So I take the service elevator up there, the one elevator that will go all the way up. That door opens, and you couldn't see 10 feet in front of you. The attic stock carpet tiles and rolled up carpet became like the breeding grounds for this infestation. And no shit, 17 lawn garbage bags full of dead moths. Because I had to go Google it. I'm like, what the fuck? What do I do? And so I just quarantined the area for like 4 days, and they all died. And dude, I had to go up there with shop vacs and pick up millions of moths. And dude, 17 like 55-gallon drum full of moths. Like when you're carrying a bag full of moths out, dude, it was disgusting. And then that's right when they invented that salt moth killer gun. Have you seen those?
I have.
Well, it's for flies, not moths.
Right.
And they don't kill moths very well. I'm probably not saying moths. Moths, right? Moth. What's the plural of moths?
Moths.
I know how to spell it. Is it moths?
Moths.
Moths. Okay. Okay, back trading. Maybe we'll make an entry called the Moth. Let's talk a little bit about what others teach on entry. So a famous entry, a trend line. Draw across the bottoms. When price breaks the trend line, most people, their emotions want to enter. Oh, it broke the trend line, sell it. Because the rules say so. Then you get a little bit more precise. You wait. It comes back up, retests. Now that support of that trend line becomes resistance. And then there's your entry. That's what a lot of people teach. I use that entry a lot as the analysis, but then I'll zero in. Also understand false breakouts happen a lot more these days because of the huge trend of movement of trend traders. I mean, the turtles were trend traders. And when that all came out and became public knowledge, right? Turtle trading, it's one of the most famous books and strategies. It's trend trading. Basically, you're trading pullbacks. When all of that became so commonly known, then you start seeing lots of trend false breakouts. I know a lot of traders that are religiously breakout traders. And, they set tight stop losses and losses happen and you move on and blah, blah, blah. But the entry is on the retest. I actually try to catch the sell trade when it's testing that level or buy trade. That's where I get a lot of people who watch me on TradingView and they're like, dude, you're selling when we should be looking for the breakout. Well, I'm trying to catch that backside entry.
What's a breakout?
So a breakout is when price is in a range. It could be a pretty big range. It could be trending up, right? Like let's say it's in an upward trend. A breakout would be when it breaks that trend. If it's in a sideways consolidation, you have the top range, the resistance, and the bottom is support, and you can see it bouncing between these two levels when it breaks out. And that's where a majority of the people out there teaching traders is to wait for a breakout, because it's basically you're being reactive, not predictive at that point, which is a very sound advice. The hardest thing to do in trading is predict what price is going to do, which I find when people teach that, I'm like, but we're always predicting what it's going to do. Even if I'm reacting to the breakout, I'm now predicting that it's going to retest. And then when it retests, you're still predicting that it's going to bounce back up. So it's like contradictive to tell someone, don't be predictive, be reactive. All right. Well, I'm reacting to the breakout, but I'm predicting on my entry. Now that it retested that breakout, now I'm subconsciously told myself, well, I'm not reacting or I'm not predicting. So I might put too big of a position size on because all of my boxes were checked. And then whammo. But at the end of the day, you're still predicting every time you put a trade on. At least the way I see it. Now, what a lot of people forget or don't put enough emphasis on is they went through all of that analysis, patience, waiting for the right entry. All their boxes are checked. Now they're in the trade. They think their decision making's over. It's not. It's just begun. Now you're in the trade. Where are you going to exit? Where are you going to take profit? And that's why so many people rely on, well, my analysis tells me this, that, this. They put their stop loss in first. They put their entry. They put their take profit. They might have a take profit too if they know how to put in, how to close half your order and move, all of these things. It's all really great ways to trade. However, I always look at people that don't want to manage the trade. They just don't want the stress. They've made the decision and now it's over. And I can see why. Because when you watch price action, when you're in a profitable trade, let's say we're in a long trade, every bearish candle on a 1 minute thing gives you this feeling like, damn it, I should have closed it. And then you're like, wait a minute. Oh, I'm glad I didn't close it. Damn it, I should have closed it. And dude, when you stare at that over and over, people just want to relinquish all responsibility at that point. I know. We talked about it today, how moving your stop to break even is almost this euphoric, risk-free trade. But to me, now when I do that, I'm almost guaranteeing I'm getting zero. It almost feels like the gods of the Forex. Oh, look we got Clayton over here with a risk-free trade. Let's screw it up for him. Let's give him a zero. And then, that happens to you 2 or 3 times in a row. And then you go, I'm not putting that fucker at break even anymore.
Does that feel like working the pitch or working the count to get a walk and then getting picked off at first? You just wasted everybody's time.
Or let's put it in a construction, okay? You're running the water pipe crew. And you got a pretty aggressive schedule. And the last few floors, you ran right, maybe a little over the schedule. You had to lie a little bit to your boss. You moved the game boxes up a floor before it was tested or really done, just to make it. The GCCs, you moving up. Oh, it's Friday. Oh, they must be done, right? So you've had to play these games a few times, but now you're a day ahead of schedule. And the test is going good. Your tools are moved. The floor's clean. And so now you're in that risk-free trade, right? Stop loss. And, Friday at 3:30, a fitting blows, floods the floor, and you're like, fuck. Right? That's what it feels like. You took your foot off the gas pedal. And for me, being the type of trader where I don't give up on trades. I don't trade with stops most of the time. I'm not afraid of managing my trades. I'm not afraid of closing my trade too early and beating myself up, right? Profit's profit. And I'm also don't beat myself up when I make a mistake and probably should have mentally closed the trade. And now I go through a week and a half of drawdown on it. And yes, I exposed myself to a little bit of risk. But I don't mind doing the hard work it takes to study and analyze and make predictions and find highly probable levels that I need to be focused. When you put that stop loss to break even, it feels great. It gives you that warm fuzzy, like money management rules, and now it's risk-free. To me, it hurts almost more when I have a profitable trade that I think's been moved far enough in my direction, and I listen to that little voice, let your winners run. You got to let your winners run to really make money in this. And I move my stop loss to break even, and then when it comes back, when I wake up in the morning, it came back, and damn it. I'd much rather close the trade too early than take those. Only because I felt like I gave up on focusing and doing the right thing on that trade. Trading is just one of those things. There's no shortcuts. You're just going to have to find your own swing. Are you a Mark McGuire swinger? Or are you a Barry Bonds swinger? I don't know.
I'm in several Telegram channels, and every single one of them, our competition. they constantly show the results of their robot. And every single one shows only the gains and never, ever shows the drawdown because they've selectively cropped their MT4 screen to exclude equity and free margin.
Isn't that weird?
Isn't that something? They never, ever, ever have links to their Myfxbook.
Yeah, dude. No one does.
I'm in one channel that has 60,000 subscribers.
Right.
And it's always blue, which is profit in MT4. It's never an equity or a free margin value.
Yeah, they crop it out. That's magically where they put their call to action. But yeah, I mean, this is what we're doing, what I'm doing and what you're doing.
The hard way.
The hard way. Giving people your Myfxbook link. I saw someone post in one of these Forex groups. You know, it has 42,000 people. And some guys
Do they have a podcast with faces?
No. He posted, it was a meme picture. It was like, here's the face of any trading guru when you ask them for their Myfxbook. And it was like, but it's so true. There's so many people out there trying to sell stuff, trying to get you to listen to buy their book, it was a big reason why I never wanted to do training courses because so many idiots out there have ruined it, right? Because at the end of the day, most of those guys aren't real traders. They may have been for a while, but they didn't get over the hump. Otherwise, they would not run from the opportunity to show you their Myfxbook. Or they've boasted themselves like the world's best trader so much that they can't show that, they have a 50% win percentage. Which, by the way, guys, 50% win percentage, pretty fucking amazing if you're phenomenal at your money management. If you're winning 50% of your trades and you're doing the 1 to 1.5 risk to reward, you're a profitable trader. People get wrapped up in win percentage.
Pips.
Like people, now that you're involved in the channel, it's like, well, how many pips are you going to guarantee me a week?
And what's my answer?
I don't know. What is your answer?
My answer is we're looking to get 1% a week.
Right.
If you're looking for guaranteed pips, we're not for you.
Well, or even guaranteed returns.
Right.
But, my 7-year average, maybe it's 8 years now, 1.5% a week. Some, like this week, 6%. You know what historically happens to me after a week like this? I have a horrible week next week. But I'm going to change that next week.
I met Alan on Telegram this week, and he wants to know, is it possible to ask Clayton about bear and bull traps and if they play a part in your strategy?
I think what he's referring to is when you become this price action trader, the doji, the morning star, the evening star. What was it? Last week's AMA, we did a naked trading exercise.
Correct.
No indicators, nothing, just pure price action. And, we were, 80, 85, 87% accurate on our pretty much live trading when you hit the rewind button on TradingView, which is my funnest thing to do now. You can trade a 4-hour chart and go through a year in 20 minutes and just crush it because, when you see the charts the way...
Let me explain the exercise. You tell the journeyman, pick a pair.
Pick a pair.
And he just picks a random pair, a major.
A major pair.
And you go back, a couple months?
Yeah, or years.
And you remove all of your markups in TradingView. You remove all of your ranges and your bands and all of that, your indicators. Or you hit play, and then you pause it and you tell them what it's going to do.
Right.
Then you hit play, and almost every time it does what you think it's going to do. And it's really cool to see that because they get to see how you think.
The best thing you could do is forget about the indicators. Forget about all of them. Learn how to price action trade. Learn what price is telling you. But you got to take it with, you got to take it with anything could happen at a moment. Just because you're hitting a support level doesn't mean it's for sure buy. The probabilities are there, especially if it's hit this support multiple times in a row. Now, understand this, and this is always lingering there. More money is to be made by the people providing the brokers liquidity by breaking that support and going against what the common rule is. Just always remember that. Because, guys, let's face it, everything comes back to money. Everything. Power, money. It doesn't matter how good looking you are if you have enough money. Trading is no different. People are playing this game to make money. And the people who are taking the opposite side trade than you are want to make money. And I'm no like conspiracy theorist. And I don't think brokers are out to bankrupt us all. Actually, quite the opposite. Brokers won't be in business if they stole all of our money every day.
They want us to keep trading.
Exactly. They're making money off the swaps.
The casino wants you to keep
and your
playing.
Commissions. However, they're passing your trade on to a prime broker who doesn't give a shit about Jill Smith's $5,000 account. That's why huge time frames, big time frames, support and resistance work so well, because these institutions are always managing their risk, their money management. Now they're playing with hundreds of millions, and they can see, all right, for instance, on Myfxbook, it will tell you your risk based on currency pair in a pie chart. So you got to think, if you're the liquidity provider, you're Deutsche Bank, right? You got 100 million, maybe even like 10 billion diverted over for your FX liquidity, because banks provide liquidity. That's their job. And yes, they probably have a trading desk because they got to hire people like me to trade their way out of positions that they got into by providing liquidity for all of us retail traders. So they know where these levels are. They know where their risks are getting too big. So then they trade their way out. And that's why we have a market. It's why it moves. Plus, they got to do business with companies overseas. Dyson Vacuums. So, it's a British company. I think so still.
It is.
They sold $10 million worth of vacuums in Target this month in America. Well, guess what? US dollars got to be converted to British pound because the owner of Dyson wants to buy a pool.
Also because he has payables.
Right. He has to pay his employees. So, business going on. Well, at the end of the day, there's no conspiracy against you. However, they have the power to bump that price up to wash out a bunch of those trades, right? I mean, let's just think about it. If you had that power, your job as Deutsche Bank's head of FX operations, right? The part that's providing liquidity for these retail brokers. Hey, the pound US dollars hitting our support level on a monthly. You're going to look at what you're carrying in trades. I guarantee if you go to Myfxbook and you look at the outlook, everyone's going to be long. The outlook's going to say 99% of retail traders, because let's just face it, Deutsche Bank's not putting their trading account on Myfxbook. No, we are retail traders. People in this realm are using Myfxbook. So, and all Myfxbook's data is, what is the retail trader doing? You look at the outlook. Well, shit, man, 99% of the people are long. I better get long. Well, old Clayton here at Deutsche Bank FX. Let's short another 100 million, bump price down. Let's make everyone think we're going to break this support. We'll soak up these 10 million stop losses because we know all these idiots are going to put a tight stop loss because it feels good. This is such a big winning trade. Everyone's long. Everyone's going to put their stop here. Let's soak up this money. And it's not like they're going, fucking Matt Simpson's money. No. They're just going to go, look, I got to make a long play here. So let's go a little bit further short, see what it does to our numbers. Oh, I mean, he's just doing what you would do if you're in that situation. If you're pouring concrete and you think you're running out of mud and you're coming up to the break point. Oh, how much is left in that truck? Oh, you're going to start thinning out, right? Because it's either that or you order a whole nother 10 yards in a truck and you're going to throw away 8 of them. Or you make a calculated guess. It's not that you're trying to screw the guy over that just paid you to pour his sidewalk. You have a parameters that you got to live within. For them, regulations and rules. But if you do your job and you do your job right, you're going to do these things. And it's not malicious. It's not that they're trying to kick you in the balls. It's not that they're trying to steal your money. They're trying to be efficient. They have investors. They're trying to run a bank. Sorry, I went down the rabbit hole there a little bit. But guys, think about not being so perfect when you're trying to be perfect. I mean, we all want to be Peyton Manning, the quarterback who throws a laser arm right into the receiver's arms. But you know what made Peyton Manning the best? Arguably the best quarterback of all time is he had good receivers that he just threw it to his zone.
After telling them where they need to go.
Right. It's about the playbook. It's about getting probabilities on your side. It's about putting the ball where it can be played.
Who are you convinced is from the future?
Elon Musk. No doubt.
These are back-to-back tweets on May 9th.
Okay. I heard him and President Trump got along. May 9th was my birthday, by the way.
Nobody, and I mean nobody, gives a shit.
I know.
Tesla is filing a lawsuit against Alameda County immediately. The unelected and ignorant interim health officer of Alameda is acting contrary to the governor, the president, our constitutional freedoms, and just plain common sense. Frankly, this is the final straw. Tesla will now move its headquarters and future programs to Texas, Nevada immediately. If we even retain Fremont manufacturing activity at all, it will be dependent on how Tesla is treated in the future. Tesla is the last car maker left in California. What are your thoughts on that?
Good for him. Here's a guy.
He also said, arrest me first later.
Well, yeah, I saw that one where he's like, I will be on the front lines. I'll be the first person to work with my workers. And if California is going to arrest anyone for doing their jobs, let it be me.
You know, he's calling out GM and Ford, and he's referring to their bailout bullshit from 2008, right?
Right. Well, and I love Elon because he has the balls.
Ford didn't take a bailout, by the way.
No, and I made money off that trade, but
didn't we all?
Elon has the balls to just be his own person. That's why, dude, California is making a huge mistake. Huge mistake. And then, Texas and Nevada will take him open arms. But let's put this in a trading context. You're in a pair, you're long or short, you're married to it, you're in a little bit of drawdown, and it starts messing with you. It's not following technical analysis anymore. So this is him taking a loss for a longer play. Because, dude, do you think it's cheap to move your headquarters? And, it's not his money anymore. It's investor money.
I love spite moves, by the way.
But this guy is gold.
This reminds me.
Because you know what? Texas and Nevada are probably like, we'll give you tax breaks. Well, all of your employees will get cheaper housing, no state tax.
We have lots of sun, too, for your solar enterprise.
Dude, it's the best move ever. California, I'm sorry. I know a lot of our listeners are from California. I love visiting California. But, man, their government there, they're going bankrupt. And, now it's like, we're going to stay at home even though the numbers are flattening out and people are dying less and less.
I think it was the 90s when they had a monopoly. They had monopoly hearings.
Are you talking Tesla?
No, I'm talking monopoly. Microsoft.
Oh, yeah.
When Microsoft had hearings in the 90s for being a monopoly, they were like, fuck you, we'll just move to Vancouver.
Right.
I love that move. I love that power play. I'm by no means pro big corporation in that sense, but I love this idea of, all right, I'll just go somewhere where I'm wanted.
Well, here's California in a nutshell. And this is sad. I'm going to show a little bit of my political side here, although I don't want to. Here's California in a nutshell. If you make money, they're all over you, right? You're the soccer mom. And I heard this somewhere, so if I'm not giving you credit, don't write into the show. And if you're the soccer mom who has a good job, makes good wage, has a husband, has a good job, and you're going 10 miles over the speed limit, there's a cop pulling you over, giving you a $300 ticket. But as he's writing you a ticket, there's 10 homeless people shitting on the sidewalk using needles they were given to that were paid for by that soccer mom's tax revenue in a shanty town that business owners who disagree with this they have more rights than the business owner who's paying the taxes, by the way. These cops are powerless and because there's no money in it. There's no money in arresting that bum. So they're not wasting their time anymore. And dude, do this over and over, years over years. The do-gooders no one's going to want to be a do-gooder.
When the Australian dollar increases heavily one week.
The AUD for some people that are only looking at acronyms.
It's not an acronym. That's an abbreviation.
Wow, it's abbreviation. Sorry.
Do you see the correction the next week?
I would say yes. Here's when it doesn't work. When a fundamental, because we're talking fundamentally, right?
That's my game.
Right? Last week, the AUD had a rate decision. It was favorable for the AUD, and we saw quite a bit of a run on the AUD. It's almost predictable that this week the AUD is going to correct, meaning devalue a little bit. However, if that fundamental news is strong enough, again, we're talking about the bulls and bears traps, right? Like, what's his name asked?
Alan.
Should remember that. It's my last name.
Again, nobody cares.
But that could be a trap, right? Because you're like, hey, AUD midweek just went on this rip-roaring race. Now it just has to come back. I'm a technical trader, and I look for pivots. And what was show 27?
What?
Pivots. It's a mathematical equation, right? So what you just described fundamentally, technically happens all the time. When price veers from its mean, its normal, its range, it tends to want to come back. It's probably not 27. That was a guess out of my ass. But yes, when the AUD surges.
Episode 26.
Oh, it's one off by just throwing it out of my ass. When price veers away from its mean, its pivot, or fundamentally you see, there was a rate decision that was favorable. That's when I start looking for that correction. And that's where a lot of criticism comes because they're like, dude, you're trading against the trend. But guys, by the time you can see a trend, by the time it's such an obvious trend, you should be looking for that reversal. I'm sorry. With today's algorithms, ETFs, robotic trading, and so many people from the turtle phase, I saw you look it up over there. It's pretty interesting, right? The turtle era of trend trading, there's just really no super long trends anymore. Now, equities, don't get me wrong. Equities there is, because guess what? The idea is a company is going to grow and grow every year. And if they're a sound, honest, transparent company, then they have a good CEO with good strategies. That's why buy and hold strategies work so well in equities. You find a really good company, it's undervalued. I mean, it's no secret what Warren Buffett teaches. Find a good company that has, good foundation, it's undervalued, and buy it and hold it forever. And then when you're 85, you're the third richest guy in the world and everyone listens to you. Forex is different, guys. Same concept. Find a pair that you think's undervalued, but how do you find it undervalued? Well, RSI, indicator. Maybe. It's a tool in the tool bag. But when you plumb long enough, do you really need the torpedo level? I could tell a 1/4 inch per foot fall.
Sure.
From 80 feet away, just looking at the hangers.
A 1/4 inch per foot fall is the slope.
The slope.
Right.
And then when IPC came out, it's like you got to have an 1/8 inch over 8-inch pipe. All right, guys. So we're going to finish this thing up. But look, man, if you want to get in the community channel where you can talk to everyone, share ideas, I get in there, Matt gets in there. Go to AlanFX.com, hit the Journeyman button. It's $20 a month to get all of my trades, all of my discretion. What are we up? 18.5% in 5 weeks. What'd your 401k do in the last 5 weeks? Probably not 18%.
With what drawdown?
We're sitting right at 1.5%. Now, it wasn't easy to get there. We did have scary moments, some high drawdown, some grit. What's really funny, guys, is like you said, Matt, I could show all the good times, but I'm showing all the bad times with the good times. Just like that young kid we talked about on the last show, where he's like, I'm going to make 10% a month, and I'm going to take a 1.5 years to learn trading. Then I'm going to make 10% a month, and I ran it on my spreadsheet, and if I do that for 10 years, I'm the third richest guy in the world. Guys, what I'm going to tell you, you can make 10% a month, but the amount of stress, the amount of work that's going to take, the amount of drawdown that you're going to have to grin and bear, the amount of sleepless nights, are you really ready for it? Because to make 18% in 5 weeks, having hundreds of people watch your trades, it's not easy. It's not sustainable for long periods of time. And it's doable. However, you can't expect that forever. So I'm going to wrap it up by saying, look, guys, if you like the show, tell your friends about it. If you want to get into trading, if you want to get in with someone who you trust, if you want to get in with someone who will show you the bad times with the good times and share you how they're spending their own money, go on over to AlanFX.com, fill out the form. I won't send you bullshit emails, but I will send you free training, access to our free channel, access to our paid channel, and then here soon, some really good, poorly produced videos. But they're training courses from someone who just heard Forex yesterday to someone who's been trading years and wants to be fully automated. I'm really excited to get them done.
Thank you very much for listening. Please join us next week.
Over now.
If you'd like to learn more about Clayton's signals, please visit www.alanfx.com. You can find me on Twitter, Instagram, and Telegram at OFPMatt.